What is going on, everybody, and welcome to another weekly update. And what I like to do in these videos is provide you guys some upcoming earnings, some upcoming events to get you prepared for the week ahead. That sounds like something you're interested in. Consider subscribing, as I do also provide a technical analysis on Sundays where I go over the charts for entries and exits. And I also give a pulse of the market daily on X at Hemi137. So you can check me out there as well. But before we get started, remember to drop a like, share, drop some tickers down in the comments on what you're looking at this week, what you're most excited about. If there's any particular stories, let's get it out there and share some information. I think that would be fantastic. So that way we can all be on the same page and what to be looking out for current events. So that being said, let's go ahead and dive right into what we got. We are getting a lot of information about what is currently going on in the economy in general, especially with the new transition of the new administration, which will take place in January 20th. So we got some time, but ultimately, as of right now, there's a lot of information that's dropping that is kind of leading up to what we could potentially see playing out next year. Now, let's recap last week real quick and give us some good insight into what we could be looking at and kind of essentially reinforce what we've been talking about this whole time. Now, despite the market continuing to go up and continuing to climb, there's an underlying sentiment that is showing otherwise, in that what you're seeing is manipulation at its finest. Being said, let's get into some earnings breakdown. Again, I'm not going to try to list too much of the earnings stuff here, but I just like to essentially put them on here, ones that I'm looking at, and kind of just briefly go over them. Shop obviously was a big one this week. That was one of the big companies that I do like with what they are doing with their products, essentially e-commerce space in general. I think Shop is one of the industry leaders in that particular space. They continue to again innovate and producing products that are allowing their company to grow quite rapidly. Something I talked about in the current environment, what you want is any kind of tech in general. The overhead isn't as bad in a lot of these other spaces. Your margins are a lot better. So when you go through rough times like the current economy, things start to do very well in general as far as the tech space. So it's good to see Shop was doing great. Now, Home Depot, on the other hand, despite them running up and beating expectations, again, they're another loss quarter over quarter. That's about a year and a half of losses in a row. So again, weak consumer, we're still seeing that being reflected in Home Depot. Disney actually did really good this week. Um, Obviously, they had some really big summer movies that have come out. So with that being said, that's allowed them to recover a lot of losses, especially in their parks. I don't remember exactly what damage was done through the hurricanes uh, for Disney in Orlando, but ultimately, as of right now, again, they're still doing well because of the massive success that their past summer hits have essentially done. So again, they crushed it there. Um, Now, as far as the earnings themselves, again, there's a lot of earnings continuing to go on. We'll get into some of them here. As you can see here, is like we like to do is pull up all the earnings calendars and kind of go over the ones we're really watching for the week. So we'll do that here in a second. But there's some massive information that's coming out that we need to really be focused on moving forward. Core CPI came out this week, came in line 3.3 with expected 3.3. Now, the biggest thing here with the core is to understand we're not heavily focused on the core at this moment. One of the biggest takeaways we need to understand is where we were pre-pandemic and where we are now. And then even though we've cut by 50 points and another 25 points, so about 75 points in total thus far, what we have to understand is that inflation is still very high. The consumer is very weak at this point. So all you're going to continue to see is more and more disinflation because of the fact that the consumer just doesn't have any cash to spend. Even on the splurging on groceries or the Netflix account, cheap entertainment, it's not enough. Like, people are still struggling because a lot of these costs are still very, very high in absorbing a lot of the costs that we did not have pre-pandemic. Now we have car insurance, which is still double-digit inflation, which is a huge chunk because everybody still, if you own a car, you have to have insurance. So that's still chewing up a massive part of people's excess cash. And understand everything on here is typically what you have to pay for anyway. So any kind of transportation inflation is still up by 8%. Car repairs, people are not going out and buying new vehicles. They're trying to repair their car. That's still very high. Homeowners insurance is 5.2. So owning a house, HOA fees, condo fees, anything else you may pay for there is still very, very high. The price gouging continues. I didn't put this one on there, but even renter's insurance falls right after homeowner's insurance at like 4.5, I believe it is. So still very, very high. All these numbers are still very high. So the excess cash people would have to maybe go grab a Starbucks or go spend on something else, they just don't have it. And health insurance is very high as well. You have to understand a lot of these things have been filtered out. And that's what I try to emphasize on this channel to be paying attention to, because what you're being told is not exactly the truth. And ultimately understand that, again, you got a lot of hidden costs that are not really talked about. Yes, groceries are still high. Specific items have been taken out of groceries, so it's knocked down groceries. So it's not listed as number one here, like coffee is always a number one. Meat is always another one as well. That essentially the inflation rate is still much higher than it was pre-pandemic. So you have to understand that even though they're telling you these things, again, they are suppressing a lot of things that would essentially cause inflation on these items to go much higher than they actually are. So again, inflation is still very high and still very much a concern. And then you add on top of it the fact that a lot of people are still getting let go. A lot of new jobs aren't being created because these businesses can't get new loans because the interest rates are still too high from what they were 3 years ago. And so, again, you can see how this is spiraling out of control and how it's going to be offloaded into next year when you got a lot of loans that are supposed to be maturing. You got again the port strikes, that negotiation has to continue in January. You have student loans that essentially have been pushed through or delayed to this whole administration till the new administration. So now you got an average of like $300 to $400 of student loans that have to be paid that haven't been paid over multiple years. You have a debt ceiling that's coming back that has essentially been removed over the past year and a half. So they've been wildly spending $1 trillion every 90 days. You have all these things that are coming essentially to do here in the new year. And again, a lot of this information you're seeing, I haven't listed some of the things, but now what you're starting to see is them planting seeds that the odds of a recession have jumped up to 75% over the next 12 months. And when I get into Powell here, which I have listed here below, I can go ahead and touch on that now because I'm kind of just leading into that right now. But, Powell had a speech this week. He fielded questions, but he said he was not in a hurry to reduce interest rates. Again, I said he would be dovish towards the end of the year to try to preserve the current administration and to try to, again, cast blame on the new administration. But again, you have to understand this issue has been persistent for multiple years at this point. It's not going to just be because the president changed. It's going to be because the broken system. And again, with him saying all these things, they're greasing the skids for the odds of a recession to come back. He said we are very, very close. At least the interviewer that was interviewing Powell was essentially saying that we are essentially a hair away from a soft landing, is what they're trying to portray this picture. But you have to understand that's not what's going on. Like there have been quantitative easing on these banks. You had 1,000 banks just a couple weeks ago become Fed banks. They bailed out 1,000 banks. They've lost another bank. We're still very much in a banking crisis. And then understand the new year, they're not going to do that. So is Powell essentially going to rug pull all the banks come next year because of the new administration, as there's a lot of friction between the new administration and Powell. So that is something you're going to have to keep in mind, and how this thing could potentially play out, because he also referenced emergency tools that he could use to help essentially save the economy, which is then just turning on the money printer to bail out banks, which they're already doing. So, again, I wouldn't be surprised if he, again, rug pulls and then everything starts, shit hits the fan, and then he tries to come in and save the day. So, again, you got a lot going on just in that in itself. Now let's jump back up here. Using U.S. housing debt jumped by nearly 147 billion, which is historic. Again, people are putting everything on debt or buy now, pay later. Affirm just had their earnings and they absolutely exploded. Affirm, which is buy now, pay later, which is essentially integrated in a lot of these businesses, is now just got approval for UK. So now they're moving into UK territory, and none of this is being reported. Typically, if you don't pay your payments, essentially you'll get dinged on your credit score, but that's not reflected when you're doing buy now and pay later. So that is one of the biggest issues there. Now, 36% of Americans say they would rent if they were going to move. And this is, again, another very historically high number. People are normally looking to buy, but the fact that home ownership is out of a lot of people's reaches, because the average mortgage, I believe, is over or the average home, I believe, is over $400,000 across the U.S. at this point, which is still, again, very, very high. And understand people want wage increases to try to go with inflation, but that defeats inflation. It's not a disinflationary move. Essentially, what needs to happen is there needs to be more jobs. This price gouging needs to be corrected, but you have to understand, because of the pandemic and everything that occurred with the pandemic, you're still dealing with the fallout of that and what that looks like. And so this is the problem, is you need to unwind all this and normalize everything. And it takes time, and it is very, very painful. You're seeing tons of people lose jobs. You're seeing people drain savings account just to stay alive at this point. So Spirit Airlines filing for bankruptcy. So another airlines goes under. And then another huge news here is Gary Gensler suggesting that he may be leaving the SEC here. I believe it's on November. After Thanksgiving, he's supposed to be stepping down. Now, this comes in the terms of a lot of things going on. A lot of states are saying that he had overreach with crypto, that he shouldn't have been messing with crypto. And then you also have, the fallout and immunity coming from all these other businesses like Nvidia, Meta, SMCI, right? So you have a lot of stuff that is very questionable and fraudulent. You have a lot of people stepping down because of the new administration that's coming in. That is a huge, huge red flag. And this is why I said next year is going to be all about essentially fraud exposure. And you might get a massive correction because of all the fraud. Once people actually, if the new administration does come in and says what they said they're going to do, a lot of fraud is going to be exposed. And what is that going to look like in the market? And so these are things we need to be paying attention to moving forward. So with that being said, let's get into weekly events. There's not a lot scheduled this week. Again, you're getting into more of a period where the volume is going to start dying down. You're getting into the holiday season. Again, typically we'll have some sort of Christmas rally that can essentially occur anytime between now and February, because again, this is supposed to be one of the biggest times of the year where you're spending because of holidays. Again, Apple has been interesting because they stopped a lot of products from being created. Now, this is, again, a telltale sign of where the consumer is at. If you're going into one of the biggest holiday seasons and then one of your biggest products is just not going to be, a lot of products aren't going to be manufactured because of that fact. So, again, very, very interesting times. We'll see what the Fed says this week. Again, they're going to try to, again, fluff everything before the end of the year. That's very highly expected from them. So we'll see what happens. Now, our next monetary policy is on the 18th. We should get an economic summary of that. So that will give us projections. Again, the first two projections are probably going to be the most accurate. Anything after that is, again, it will move the market, but you have to understand whenever projections come out, they do move the market a lot. But again, they're never accurate, right? It's only the two closest projections have the most accuracy. Really, just the the next essentially monetary policy or accuracy would be the one to go with there. Core inflation, we just got one this past week, so our next one isn't until December 11th. Expecting again, you got with the core inflation again, just because they're cutting rates now isn't going to mean that it's going to be you're going to see that reflected on the next report. It takes a very, very long time for any kind of inflation to be realized. And again, I think because of the massive spending by the Fed, you're going to see a massive decline in inflation once that goes away. Because again, you're going to have government efficiency come in, which is led by Elon Musk and Vivek, and we'll see what happens with that. But again, ultimately, once that's corrected, again, there's going to be a lot of changes coming in the new year. We'll see how quickly the new administration starts executing. But again, you have to understand that it will take time, but you will see a massive correction, I believe, in the market around February time. That is our normal cycle time, or we correct anyway. So that's what we are anticipating. We'll see what happens. But again, you can't continue to prop everything up with massive, massive spending. So, and then as always, we'll go over our weekly calendar here in a second. Expected moves. Now, this is interesting, is the market in itself is very high. Again, it's pushing back up near 100, which typically, again, we're normally sitting around like 60, 70. So the fact that we're up near 90 is a lot for this week, because we do have a big earnings this week. Nvidia is on the clock, which is something we've been waiting for, because it can have significant change, especially because of the fact that you had SMCI just partner with Nvidia and have asked for immunity. So again, it's going to be very critical this week. Tesla is very high at 24 points. Again, they're roughly around like 10, 12. So they've pretty much doubled. Again, if Nvidia goes down, it can take a lot of big tech down, which could lead for the whole market to turn over, because nothing else is really strong at this point. Boeing high at 6, JP Morgan high at 6 as well. JP Morgan, that's interesting again, because on average they only move 4 points again, so that's actually up as well. So everything is very, very heavily weighted on what happens with Nvidia this week, and that's what's a scary thought. So let's dive right into the earnings schedule. Again, there's some really good ones that are still going on. Earnings will always continue to go on, even if I may not start showing them here. Again, what I like to do on this channel is always go over the industry leader ones and point to the ones that I look at, and then ultimately understand that, again, they will continue to, the earnings will continue to go on throughout the rest of the month. But again, I stopped showing this calendar because of the fact that, again, none of them really have any kind of impact on the market. But again, this week is still another very big week. We'll get a lot of good earnings this week. So we're going to continue going over the schedule and kind of looking at what I'm looking at and what we could take away from some of these earnings. So again, on Monday, there isn't really anything I'm watching on Monday. Tuesday morning will be big because you got Walmart. Again, because of our current economy, I am expecting Walmart to do extremely well, at least over the next couple months, until these rate cuts start becoming impactful, which will still take another 6 months from now. Expecting Walmart to do really well, because again, their general store brand is one of the cheapest brands you can buy. So it's helping people save dollars. And yes, people are trying to save dollars, maybe not hundreds of dollars, but $5 here, $2 or $3 here is a big difference when you are struggling in an economy. So expecting Walmart to do well. When Walmart's just doing bad, that means the market is turning around, things are getting better. So again, it will still take some time. But again, one you're always want to keep on watch to kind of see where the consumer is at. Lowe's is the same way. If people are not moving, buying new homes, Lowe's will start doing bad. And we saw that in Home Depot, and expecting the same with Lowe's. But you have to understand, if they shoot up, is because essentially expectations are low. Again, you have to remember they're moving expectations, because for some reason, over 80+% of all companies are beating expectations, which is unheard of. These companies should not be beating expectations. Their expectations are so low that if you miss, you're going to crater even more. And if you do hit expectations, then your stock will shoot up. So again, This is all strategically done so that you can essentially push a narrative out there that's currently going on. So, and then that's pretty much what I'm watching on Tuesday. On Wednesday, Target will be important. Expecting them to crater more. Again, they're trying to take more of the Walmart approach and focus more on the grocery side of everything. We'll see if that's true or not, and see if they've made that adjustment. But that will be interesting to watch there. Um, NIO, I really don't like that company in general, so we'll see what happens with them. But EVs in general, or if it's not Tesla, and again, Tesla is more than just EV company. I've always stated this. Again, they're more of AI, and soon you'll see with FSD in humanoids, you can completely get rid of the whole EV sector of Tesla, and they would still crush it with the humanoids coming up here. So NIO, again, we'll see what happens there. But again, Wednesday after close, this earnings is going to be huge because of all the speculation and fraud security. Nvidia is essentially on deck. Yes, I do believe the GPUs, right? Like, because of this whole AI essentially revolution, that I do believe is going to help a lot with the current issues that we've had with production and the spending and everything else. I do believe it will address that, but you have to understand they're using a lot of forward numbers that essentially is fraudulent. And at this point, we have to understand that because of that, we're trying to get ahead and trying to portray this perspective that, again, we're leading in the world, especially when you got China and Russia on your coattails. You want to make sure that that's represented in a lot of your businesses. And this is why I suspect that they are trying to get immunity, because the government may have stepped in and said, hey, you need to start making these essentially numbers look better, because, again, we're trying to portray this, again, a Cold War type scenario with AI. Is what I believe is happening there. This is why SMCI essentially got nailed for security fraud. But if for some reason Nvidia gets nailed for security fraud or something like that, that will be massive news, and that will crater the market. So this is why, again, the market's pricing in 97 points. And I think it could be a huge move. So it's definitely Wednesday after close is going to be huge. You also got Snowflake, which is huge and supports a lot of AI infrastructure, and is one of the most secure infrastructures. Why Snow has got so much hype, even though the stock has been plummeting. But if Nvidia does well, Snowflake could do really well. Palo Alto, again, for cybersecurity, will be really good as well to be watching. That could be another level to be watching there. And then that's pretty much what I'm watching. So again, these three right here, but major watch will be Nvidia this week. And then Thursday, Baidu, again, they lead in China. And as far as AI, they'll be interesting to watch there. John Deere will be very interesting to watch. Again, if people are struggling, inflation costs and everything else, BJ's will be another one. Those will be really good ones to watch as far as the consumer and where they're currently sitting at, to reinforce what we've been talking about. Then some of these other ones like Ross may be interesting. I'm expecting them to get cratered, or they might actually do well because they have cheaper clothing. And then that should be it. But yes, this is pretty much one of the biggest weeks here. Again, just the Walmart and Nvidia alone are two of the biggest ones to watch this week. So Tuesday and Wednesday this week are going to be extremely important. You can see why they've essentially priced in 97 points, which is well above the normal average of expected move during a week, and rightfully so, because it's just the weight in which Nvidia holds on the market. So very interesting week. So be prepared. Again, we are coming into the end of the year. So after this week, what I'm anticipating is things start dying down if we get through this week without any major news. Again, news headlines are going to be important. I'm recording this on a Saturday morning, so a lot of major news have been dropping over the weekend. I'm expecting that, especially with the new administration coming in, expecting some sort of major news to be dropping over the next couple weeks. Again, maybe nothing will happen. Maybe we won't get it until all of next year. Again, they try to like to filter the news out around the holiday season, and then they kind of just offload everything in the new season, just like we did over the past year. We had Powell hype everybody up December of last year that we would get all these cuts in March, and nothing happened until September. We finally got our first cuts. So you have to understand that, again, they'll try to hype everything up so you can get the Christmas rally, make everything feel good towards the back half of the year, and then you just offload everything in March, which is our normal correction period. Again, there's a lot of things that are coming to maturity around that time, or things that need to be addressed around that time. So again, it will be a very interesting 2025. So prep for 2025. If we can get through this week, the market will be stable. This week could potentially be the last push for the end of the year, especially if Nvidia does well. And then we'll have to go from there. But again, be very, very careful on what happens next. I think it's very slippery slope. We've had one of the largest runs, I think, in history over the past, even since the pandemic, that rally after we sold off massively, the rally we had then. This has been one of the strongest rallies we've seen in history. And again, you have to remember your Treasury and Fed are essentially quantitative easing on banks, filtering information. So essentially the public doesn't really get to a very open eye on what's actually going on out there. So if you have made it this far, I do appreciate it. Go ahead and remember to drop a like, get the word out there. Let me know what you are looking at this week. Let me know what you're anticipating for 2025 down in the comments. And I will see you guys later.